Hello, and welcome to the weekly special presentation for Friday, May 26, 2017. My name is Glenn Tompkins. I'm a Senior Product Support Representative and Instructor here at VectorVest, and it's my pleasure to give your weekly presentation this week. This week, our presentation is entitled, To Leverage or Not to Leverage ETFs. Last week, the essay written by Dr. DeLito was all about using ETFs to trade in the foreign markets. Also last week, the special presentation done by Todd Schaefer was all about using contra ETFs in a down market, and he showed you how to cherry pick them. ETFs are exchange-traded funds. They operate much like a mutual fund in that they track a group of stocks or an index. So as you can see, ETFs can be used to trade both in bullish and bearish markets. This week, we will explore more of the flexibility of VectorVest to help you to pinpoint the types of ETFs that are right for you. Now let's get into the software. From the home page, we're going to go directly to the Unisearch tool by clicking on Unisearch. Now we say that Unisearch is the most powerful search engine ever created by man, and every week we show you a lot of the capabilities within the Unisearch tool, and this week we're not going to stop. If you look to the left, we have all of our search folders. One of the folders that we have here specifically is designed for ETFs. If I click that folder, there are different searches designed to help you to find all the types of ETFs you want. Best performing ETFs in a confirmed up call. We have buying contra ETFs. So you can denote which one of these ETF searches are bullish or bearish by the green up arrow for the bullish searches and the red down arrow for the bearish searches. Now, buying contra ETFs is all about playing the market to the downside, but playing ETFs that go up in value as the market goes down. This is a great way to take advantage of a downward trending market without having to sell stocks short. And because you're not selling stocks short, you can buy these contra ETFs in your IRA account. So we're going to start off with best performing contra ETF, confirmed up. I'll simply double click on it, and it's going to return a listing of ETFs based upon the criteria that we have set up as far as parameters. The stock sector is only equal to ETFs. The recommendation is not equal to a sell. The industry group is not equal to ETF short. Stock price actual, all of these ETFs have to be greater than at least $1. Average volume greater than or equal to 100,000 shares. The stock exchange not equal to the indices and the pink sheets. And the stock watch list not equal to contra ETFs. Contra ETFs don't correlate directly with the market. So contra ETFs actually do their own thing, and one big one that's a contra ETF is the VIX. The VIX can be up or be down whether the market is up or down, so there is no direct correlation to the market's movement, whereas ETFs and contra ETFs move the opposite or along with the market. Let's take a look at some of the ETFs that are found here. You can see their names. Now, you'll get used to, after a while, Direction signifies a triple leveraged ETF, and this is looking at the semiconductors. If you're brand new and you wanted to know what this was, this SOXL, you would simply right click on it, go over to View Stock Analysis Report. If we scroll down, let's look at what the business description is. This is an exchange traded fund incorporated in the good old US of A. The fund's objective is the daily investment results before fees and expenses of what? Wow, 300% of the price performance of the Philadelphia Semiconductors Index. So, as the Philadelphia Semiconductors Index goes up, let's say it goes up 1%, this ETF, the SOXL, would go up 3%. If you're on the right side of the trade, folks, you can make a lot of money in a short amount of time. And this is definitely an aggressive trading vehicle. But the downside is if the Philadelphia Semiconductors Index goes down 1%, your ETF would go down 3%. So if you're on the wrong side, you can lose a lot of money really quickly. Keep in mind that the triple leverage ETFs are designed as a trading mechanism. Let's close out of this. Let's go take a look at another one. Let's go down to ProShares Ultra, the Qs. Well, you can tell that that's all about the Qs. QLD. Let's right click, go down to View Full Stock Analysis Report. Let's scroll down. This one is looking at twice the daily performance of the NASDAQ Index 100. So as the NASDAQ 100 goes up 1%, this will go up 2%. If it goes down 1%, this index or ETF goes down 2%. So it's still leveraged, but not as leveraged as the triple leverage. All right, let's close out of this. Let's go find one more. We'll go down and find one more. Oh, so here's one, the iShares GS Semiconductor, another semiconductor, the SOXX. But if I right click and go to View Full Stock Analysis Report, this one doesn't have 300 or 200 or twice. This is strictly 1-to-1 or a non-leveraged ETF. The iShares Goldman Sachs Semiconductor Index Fund operates as a non-diversified investment fund. The fund primarily invests in multimedia networking and semiconductor industries in the United States. So as the semiconductor industry goes up, this goes up, correlates 1-to-1, aka non-leverage. So let's close this out. So within this search, we are finding ETFs that are triple leverage, that are double leverage, and that are non-leverage, all in one search. But what if you wanted to hone in on the non-leveraged ETFs, or the 2-time leveraged ETFs, or if you're a trader, the 3-time triple leveraged ETFs? How can you do that? Well, let me show you. We're going to go to the tab at the top that says Viewers. Now we're going to spend some time in the watch list section of the Viewers, and look here. We have a watch list folder called ETFs. Here is where you get a lot of flexibility in honing in or pinpointing the types of ETFs that you want to invest in, depending on how conservative to aggressive you are in the market. Here are the 3-time and 2-time leverage ETFs, both regular and contra. We have strictly a folder for contra ETFs. Scroll down a little bit more. Different companies put out their own ETFs, like Deutsche Bank, Direction. If you want to find all of the Directions, we have a folder here for you. EG Shares, Elements. I always thought that was Earth, Wind, and Fire, but a lot of that is gold and silver. If you wanted ETFs bullish, they're here. Company like Fidelity, First Trust, Gold, Guggenheim, Health Shares. Scroll down a little further. If you wanted to trade the indexes, both regular and contra, let's take a look at that. Index ETFs regular. This is a good place just to trade the different types of index, like the Qs or Portugal, or different levels of the Q, whether they're leveraged or non-leveraged. And in case you still want to know, right-click simply and go to View the Full Stock Analysis Report. On the Dow, the S&P, Asia Pacific, the 100, the 500. So there's a lot of different indexes that you can trade. Instead of trading all of the stocks or many stocks in one index, why not trade the ETF that represents the whole index? We'll scroll down a little further. Another company, iPath, iShares. Here's leveraged all together for the contras and regular, all in one folder here for you. Market vectors, here's the NASDAQ. And then here's the non-leveraged ETFs for both regular and contra. Other companies, PowerShares, ProShares, the Russell, Schwab, the Spiders. You see them on TV all the time. Vanguard, Wisdom Tree. So we have a lot of segmenting going on in this watch list folder specifically designed for ETFs. So let's start off with triple leverage regular. Now, in last week's essay, Dr. DeLito talked about using ETFs in foreign countries, and he did a test for you coming off of a bottom back in November of 2016. He used the first green light coming off of the bottom, and I'm going to do some tests for you using that same date. In case you missed last week's session, we'll go to the Graphs tab. We're going to move from a stock graph to a market timing graph. We're going to put this on a 6-month graph and move this out just a little bit. Here's that November time frame where we did hit a market bottom. There's the low. Coming off of that low, we were looking at the green light buyer timing signal where we found the first green light coming off of the bottom. Let's move our calls from confirmed call to green light buyer. The first green light coming off of the bottom occurred on 11/11 of 2016, and this is the date that we're going to use buying off of the bottom to test those leveraged and non-leveraged ETFs. So we got in on that green light. We're going to get out on the confirmed down call that occurred on 3/14 of 2017. So we're going to go back to our viewers tab, change the date back to 11/11 of 2016, which again represents the first green light coming off of the bottom, and it was prior to the confirmed up call that occurred on November 15th. We'll click on November 11th, click on OK. These are the 3-time leveraged ETFs that occurred on that green light. You'll see small cap, Direction, triple leverage at the top of the list, ProShares Ultra for the 2000, the URTY, the biotechs, LABU. This is something that we trade a lot in the Jockey Club Monday through Friday, the financials, the FAS, and so on. But something to keep in mind, if you're looking at a watch list of stocks, these are sorted by VST. If I'm looking at ETFs, it's important to make sure that these ETFs trade. Not every ETF trades equally. Notice that I have some that trade only 1,500 shares average volume. That is the ProShares Ultra Financials, the symbol FINU. Simply, we want to make sure that we're in liquid ETFs. So to do that, we're going to simply sort by this column, average volume. It's going to bring the ETFs that are triple leveraged with the biggest, most heavily traded volume to the top of the list. Now we have gold at the top, Nugget, and the junior miners, JNUG. We have UWTIF, Direction small caps, and so on. But these are the heavily traded triple leveraged ETFs. Notice that many of these are sell recommendations coming off of that bottom, right? Let's do a quick test of the top 10 stocks here. We'll simply move it to top 10 and click on OK to test it. Oh, look at that. So over that time period from 11/11 to 3/14, the triple leverage went up 10.21%, whereas the VectorVest composite went up 7%. We had 6 winners, 4 losers. Something to keep in mind about the triple leverage ETFs. These reset on a daily basis, and these are probably not something you really want to hold for an extended amount of time. This is an automated test using market timing, so I'm showing you the raw data. But in reality, be careful when trading the triple leverage ETFs because they do reset on a daily basis, and these are really a trading mechanism, not a longer term investing mechanism. That's just a thought to let you know. Well, let's go see how the double leverage does. The 2-time leverage ETFs, regular. I'm just going to click on these and run them as of 11/11. First thing you want to do, again, when looking at a watch list, scroll over, look at some of these average volumes. You don't want to get stuck in these if you have to get out. Sort this list again by average volume. Bring the heavily traded ones to the top of the list. And again, these are the 2-time leverage. Some of these are sell recommendations as well. We'll do a quick test of the top 10. It already remembers my dates. I have 8 winners, 2 losers. I didn't outpace the market this time, but still made money. One of my losers went against me, over 72%. No matter what types of stocks or ETFs you are trading, you should never let a stock or an ETF ever go against you that kind of percentage, which is why stops are important. We did find 4 ETFs, double leverage, that went up double digits in the time period. All right, let's close out of this, and let's do the same thing for my non-leverage. We'll scroll down, go find non-leverage ETFs regular, run it as of 11/11. First thing you want to do is roll over. Make sure, here's one, it only trades average volume 765 shares. God forbid you need to get out of it. You may be stuck. That's why when looking at these watch lists, it is so important to sort by average volume to bring the heavily traded ETFs to the top of the list. Let's scroll over. Here we go. These are non-leveraged, the spiders, the gold miners, the GDX, emerging markets, EEM, financials, XLF, and so on. Let's do a quick test of the top 10. Wow. 10 winners, no losers, 8.32%. So we kept up with the market, outpaced the market a little bit, but look at this, folks. No losers. This is nice. So non-leverage seems to be a good way to go on top of looking at triple leverage. Now, those non-leverage are something you can hold for a longer amount of time as opposed to the triple leverage. Now, I'm going to now incorporate the power of the Unisearch tool to show you how to pinpoint these watch lists directly. We're going to go back to the Unisearch tool. Remember how we had to keep sorting all of those searches by average volume? Well, what if I have a search that already has average volume greater than 100,000 shares? How about some of those ETFs we were looking at were sell recommendations? This search takes those out, says any ETF that is a sell recommendation, it won't return. All right, and this is an aggressive part that we're looking at the ETFs that have a combination of RT times CI sorted to the top of the list. So I'm going to take this, move this down a little bit, and I'm going to show you how to add a criteria to represent the pinpointing of the types of ETFs you're looking for. Under parameter, I'm going to keep this search that's already here. I'm going to simply click here. Under the blank line on the parameter, go to Stocks, Filter by Watch List. Under Operator, I'm going to click on Equal To. And under Value, we're going to go find the watch list that we want. We'll click the plus sign in front of ETFs. We want to start off with the 3-time leverage ETFs regular. We'll click on OK. Now, I'm going to change the date to reflect that 11/11 time period. Remember, that was the first green light coming off of the bottom and just prior to the confirmed up call. Click on OK. Now I'm going to run this search looking at that watch list. Look at that. Now we've taken a lot of the guesswork out. We no longer have to sort by average volume. Not only that, none of these are sell recommendations, and they're sorted by RT times CI. Let's do a quick test of the top 10. And remember, 314. Look at the difference in using the search with that watch list. 9 winners, 1 loser, 28%. We outperformed the market by more than 3 times. But again, this looks great on paper. This is a trading mechanism, and you probably would not hold those triple leverage ETFs for this amount of time. But again, on an automated summary, wow, these do extremely well in a good uptrending market. Well, let's change it again. Instead of looking at the 3-time leverage, let's take those off. Let's look at the 2-time leverage regular. Click on OK. Let's run the search. Same search. All I did was change the watch list. 1, 2, 3, 4, 5, 6, 7. It's only 8 stocks that were found on that date that met all of this criteria. Remember, on the watch list, many of those stocks or ETFs were sell recommendations. We've taken those out. Let's do a quick test of the top 10. Woo, 13.77% out of the 8 ETFs. Double leverage. We had 7 winners, 1 loser. We almost doubled what the market did, but that 1 loser was against us, a little bit less than 2%. This is doable, all right? In a good uptrending market now, looking at double leverage ETFs. Let's take this one step further. Let's change the watch list one more time to reflect the non-leveraged regular right here. Click on OK. Run the search. Here we have more than 10 stocks. Again, none of them that are sells. All of them have an average volume greater than 100,000 shares. And I love this sort to bring the ETFs with the RT times CI good stocks that are moving up in momentum, and they go up more than they go down. That's what the RT times CI stands for. Let's go quick test the top 10. 6.97%, 8 winners, 2 losers. The 2 losers are manageable, but still keeping right up with the market. So folks, depending on how aggressive or conservative you want to be, you can take an existing search in the VectorVest software, tie in the watch list to reflect the type of ETFs that you want to find, and use, because this is the power behind the Unisearch tool, the most powerful search engine ever created by man. Well, with that, folks, I'd like to say thank you for joining me for the presentation this week. And in that whole idea, it's been said a long time ago, a rose by any other name is still a rose. Well, an ETF by any other name is still an ETF. Just like there's variations of roses, as you can now see, there are variations of ETFs, and you can tailor make them to reflect how you invest in the market. So now, based upon what you see, you have to ask the question, to leverage or not to leverage? Thank you again, folks, and have a wonderful weekend.